Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane,
Back to the channel. Today we'll be analyzing Tesla and ServiceNow earnings preview. Let's do a quick recap of today's market. Today, we saw equity markets mostly softer after back-to-back gains in the last two sessions. The main drivers for this seem to be depressed sentiment and concerns over recessionary pressures. However, there is some positive news as well. Disinflationary pressures are building, taking some upside risk from the Federal Reserve interest rate off the table. U.S. Treasury yields were also softer today, but not by much, as the 10-year yield continues to hover around 3.5%. A deep yield curve inversion that took shape last year has persisted, adding to depressed sentiment and continues to advertise inflationary concerns from the fixed income market. In the energy markets, oil is holding steady around $80 per barrel, as the Chinese reopening is balanced by lower growth forecasts in other parts of the world. Internationally, the Eurozone flash PMI unexpectedly moved back into expansionary territory as natural gas prices continue to ease. Germany has also had surprisingly good data in recent weeks, and consumer confidence is expected to show a rise for the fourth month in a row in February. In addition to the economic data, investors faced myriad headlines around the ongoing U.S. debt ceiling debate. On Thursday, the U.S. officially exceeded its debt limit of $31.4 trillion, and the Treasury began extraordinary measures, including suspending the sale of certain government securities, to ensure the U.S. meets its obligations. From a market perspective, while politics generates substantial headlines, they tend not to be a long-term driver of market performance. In the last several instances of more severe debt ceiling showdowns, including 1995, 2011, when S&P downgraded the U.S. credit rating, and 2013, markets were higher in the 12-month period after the debt ceiling was resolved. More broadly, market performance tends to be driven more by economic and earnings fundamentals rather than the political landscape. Without further ado, let's jump into Tesla earnings preview. Tesla is set to report its fourth quarter earnings on Wednesday, and investors will be closely watching for any updates on the company's 2023 guidance and goals. The company has had a difficult time in the stock market over the past year, with shares plummeting in December 2022 and continuing to drop at the start of 2023. However, the company's stock has seen a rebound since announcing price cuts for vehicles in China in early January. Analysts are forecasting earnings to jump 33% to $1.13 per share in the fourth quarter, with revenue expected to grow by 39% to $24.67 billion. These estimates have slightly decreased since the end of December 2022, where analysts predicted EPS of $1.25. Despite the pandemic, Tesla was able to deliver a record 405,278 vehicles in the fourth quarter, missing lowered forecasts, but still marking a 31% increase compared to the previous year. For the full year of 2022, deliveries totaled 1,313,851, a 40% increase from the previous year, but falling short of the company's 50% growth goal. Production also exceeded deliveries by more than 34,000 in the fourth quarter, as the company's Berlin and Austin plants ramped up production. This brings Tesla's overall production capacity to well above 450,000 vehicles per quarter. Investors will also be looking for any updates on the highly anticipated Cybertruck, which is set to arrive in 2023 and will be the company's first new model since the Model Y was launched in early 2020. According to CEO Elon Musk, the truck will begin early production in mid-year. However, other reports suggest mass production will not begin until late 2023. In addition, investors will also be closely watching Tesla's 2023 guidance and goals. One key area of focus will be the progress of the Cybertruck. Despite delays, CEO Elon Musk has stated that the Cybertruck will begin early production in mid-2023. However, other reports suggest that mass production may not begin until late 2023. Another area of interest for investors will be the production and sales of Tesla's long-haul semi-trucks, which were delivered to PepsiCo in December. It remains unclear how many semi-trucks will be produced in 2023, as key prices and specs for the vehicle are yet to be announced. With these and other factors in mind, investors and analysts will be closely scrutinizing Tesla's fourth quarter earnings report and 2023 guidance for any insights into the company's future growth prospects. Moreover, investors will also be paying close attention to any updates on Tesla's semi-truck business, as the company recently reopened pre-orders for the electric semi after a hiatus. This could potentially be included in the company's guidance for 2023. Furthermore, Tesla stock has been on the rise in the past couple of weeks, and usually, where there is a big run-up into earnings, there isn't too much room to run more. However, with Tesla, I am bullish both short and long term. If earnings are good, which I believe they will be, Tesla can attract a 5% move with ease. Market Maker is projecting an 11-point move in either direction, and I think there is room for a surprise. Overall, I believe that Tesla's future looks bright, and I would advise investors to keep an eye on the company's earnings report, which is due on Wednesday after the market closes. Next we got ServiceNow. It is worth considering ServiceNow now as a stock that could potentially maintain its earnings beat streak in its upcoming report. The company belongs to the Zacks Computers, its services industry, and has a track record of consistently topping earnings estimates, specifically in the past 2 reports. The average surprise for the past 2 quarters is 5.91%. In the most recent quarter, ServiceNow was expected to post earnings of $1.85 per share, but instead reported $1.96 per share, representing a surprise of 5.95%. The previous quarter, the consensus estimate was $1.53 per share, and the company actually produced $1.62 per share, a surprise of 5.88%. This history has led to a favorable change in earnings estimates for ServiceNow recently. The Zacks Earnings ESP, expected surprise prediction, for the stock is positive, which is a strong indicator of an earnings beat, especially when combined with its solid Zacks Rank. Our research shows that stocks with a positive earnings ESP and a Zacks Rank of number 3, hold, or higher have a positive surprise nearly 70% of the time. In other words, if you have 10 stocks with this combination, the number of stocks that beat the consensus estimate could be as high as 7. The Zacks Earnings ESP compares the most accurate estimate to the Zacks consensus estimate for the quarter. The most accurate estimate is a version of the Zacks consensus that takes into account changes made by analysts right before an earnings release, which can potentially be more accurate than the earlier predictions. ServiceNow currently has an earnings ESP of plus 1.11%, which suggests that analysts have recently become bullish on the company's earnings prospects. This positive earnings ESP, when combined with the stock's Zacks Rank of number 3, hold, indicates that another beat is possibly around the corner. ServiceNow's next earnings report is expected to be released on January 25, 2023. In conclusion, thanks in part to ServiceNow earnings beat history, there has been a favorable change in earnings estimates lately. In fact, the Zacks Earnings ESP, expected surprise prediction, for the stock is positive, which is a great indicator of an earnings beat, particularly when combined with its solid Zacks Rank. Our research shows that stocks with the combination of a positive earnings ESP and a Zacks Rank number 3, hold, or better produce a positive surprise nearly 70% of the time. In other words, if you have 10 stocks with this combination, the number of stocks that beat the consensus estimate could be as high as 7. ServiceNow currently has an earnings ESP of plus 1.11%, which suggests that analysts have recently become bullish on the company's earnings prospects. Investors should also note that ServiceNow has been consistently delivering strong revenue growth, with revenues increasing by over 20% year-over-year for the past several quarters. Furthermore, the company has been expanding its customer base and increasing its market share in the IT services industry. In conclusion, we've discussed 2 companies that are set to report earnings in the upcoming days, Tesla and ServiceNow. Tesla, the electric vehicle giant, is set to report its 4th quarter earnings on Wednesday after the market closes. Investors will be closely watching for any updates on the company's 2023 guidance, as well as any developments on the highly anticipated Cybertruck. The market maker is projecting an 11-point move in either direction, and I personally believe that there's room for a surprise. On the other hand, ServiceNow is a software company that automates technology operations for companies. The company has a strong track record of beating earnings estimates and currently has a positive earnings ESP and a Zacks Rank of 3. This suggests that another beat is possibly around the corner, and we expect the company's next earnings report to be released on January 25, 2023. Additionally, it's worth noting that another company, Intel, is set to report earnings on Thursday after the bell. We'll be covering Intel's earnings tomorrow, so stay tuned for more analysis on this tech giant. In the meantime, make sure to subscribe, like the video, and comment what company would you like me to cover. As always, this is not a financial advice or recommendation to buy or sell stock. This is my point of view.